Alright guys, I'm going to come at you with another example. This came in Friday for NASDAQ. So on the 1 minute there is a supply zone here, but this is also another demand zone here on the 2 minute, or you can consider this to be a FU candle. And we draw a box, we drag it across, never plays with it during London or Asian session. So let's hop back into the 1 minute. Alright, candle, we're starting to see um, this high broken from here, so it's in a serious pulsing uptrend from here. We're watching, boom, it's creating a new higher low just like it did right here. Alright, we're watching, alright, here comes, it blew past this high. Guess what? We already see a divergence from this point to this point. And from here, right? Next candle, we keep playing. It's coming for this. It's coming to mitigate this demand zone right here, or excuse me, the supply zone. Keep watching. It looks like it wants to go. All the retail traders are looking to get into sells now because what they see on the 1 minute is oversold. They see a divergence here. No, we're going for that sniper entry. We're waiting for it to get up here. And retail traders are loading up on sells, and they're putting their stop losses right here, right? And then price climbs up. Boom. Look at that. Just liquidated all these suckers down here. And it created a new high. So, but on the RSI, it's still in a downward trend. Alright. It didn't break this high of the RSI, but it's in our zone. We are looking for sells now. And it came in the form of a divergence right there. We'll see what this next candle does. Boom. Look at that. Sharp rejection. We got an insider candle bearish. We're in sells, full yeet status, and we'll put stops just above the zone, so that way if we do get pulsed, if we do get faked out, we secure small losses, because this could just keep going up and mitigate this. I think this is a 5 minute supply zone right here. So we're waiting, looking rough. Boom. Oh, this is juiced. And we're going to look to take it down here, right? Seems normal. These lows would be a little too extreme. But there will be days where, indices will play, Asia session, London session, lows, highs, and then during New York, it will sweep New York lows and then right back up to New York highs. It's kind of crazy. It does do that a lot. However, we're watching the price. Boom, we see this right here, break structure. Guess what? We're going to see a pullback right here coming up. Alright, yeah, just as we expected. It's coming back to our entry. Kind of mad. Oh boy. Okay. Looks like there is a mini demand zone right here. So if we zoom in on that, everyone, as soon as it came in, everyone sold. And once everyone saw this smart money setup, this is perfect. We've got the pulse out of the supply zone, break a structure, coming back to retest this mini supply zone here, and then continuation to sells to these lows, and then down to here. But guess what? This is New York, baby, and price movement is a bit sleazy. So look at that, just liquidating all those break evens, tapping out all those guys down here who got in late because they're like, oh, screw it, FOMO, but not really understanding how price movement really works. And then the opposite man is like, my turn. Let me get in a better entry, right? And then we're watching because we're still in sells from right here, right? Because this is looking a bit off. And this should scare a lot of people, but we're strong. Our psychology's there. We trade what we know. Fuck what we feel. Boom! Look at that bearish engulfing candle, roughly. Guess what? We're still in sells here. Let's double down, right? And let's take it down to these lows. And in the meantime, we're on the 30, 15 second. We're looking for hidden divergences, mostly in the 30 and 15. Mostly the 15 for sniper entries. But we're looking for hidden divergences. Right? And so we're playing intraday swings. We're mixing in the bag of treats with scalps. And we're trading intraday at the same time. So, play this out. Boom, we got to break a structure here again. Guess what? It's going to come right back up, probably to this green candle right here. You can barely see it because, yeah. So, get ready, here it comes, it wants it. There we go. Oh, damn, this is kind of boring. Boom, right there, it gave it to everyone right there. Everyone got into sells below these wicks right here. Got in, sold, all the selling pressure showed up. Boom, trade hit. We're done. We just caught 1 to 4 plus our trade here. We were scalping like crazy on the 15 second because these swings are beautiful. Because we're looking at the trade here. When we're trading for scalps, we're looking for hidden divergences. Hidden divergences are incredibly dangerous to play. All right, I will hand that out to everyone to know. Here's a good example. Price moving up. However, the lows on the RSI are moving down. That's a hidden bullish divergence. You see a big candle, you're in. Stops to lows, just below lows. Take it to previous highs. Look at that. Almost a 1 to 2 RR trade right there. Just here. I mean, you'd probably have to go 20 to 30 lot to see that the correct returns if you're going to be risking 1%, which is kind of crazy. And then for these, we're looking at 582, 591 stop losses. Let's just put them right there. 639. Holy crap! It's about 40 pips stop loss. Yeah. That's I would take 2% risks on these trades, so easy 100 lots like they're nothing. Yeah, so this is a great example of a smart money play here, mixed in with a divergence leading into a supply zone, a pulse, break of the swing lows, price retracing to a mini demand zone, or the last candle before the big move, right? Everyone got into sells. This liquidated all these early sellers, and then it just sold off. The composite man took everyone out here, and he was waiting for this. Punched it real high, hit all these stop losses right here, and then let it sell off. It's quite nice of him. So